Hello and welcome to Growing Tech Fast, the condensed Org3D podcast where we talk about growing tech startups with those who have grown them. Today I'm joined by Ryan Bourne with a background in software engineering. Ryan is now the co-founder and CEO of Cloud Campaign. Ryan, it's a pleasure to have you on the pod today. How are you doing?
I'm doing great. Yeah, thanks so much for having me, Ben.
Perfect. Yeah, no problem. Thanks for being here. For the benefit of our listeners, Ryan, why don't we kick things off by you kind of telling us a bit about who you are, what your mission is, and the work you're doing at the moment.
Sure. Yeah. So as you mentioned, I'm a software engineer by trade, kind of stumbled into the startup space and realized that I wanted to start my own company at some point. And back in 2017, ended up starting Cloud Campaign, which is what I'm working on now. Our mission is really to help marketing agencies scale, which is kind of a broad, all-encompassing mission. But right now, our current product and kind of what we're focused on is a digital platform that helps marketing agencies scale social media management specifically. So if you think about your typical agency that's managing, let's say 20 to 30 clients on social media, they use Cloud Campaign to manage all those clients efficiently at scale, make sure account managers have access to the right clients, have all their digital assets in one place, and then incorporate a lot of automation to help them hopefully manage more clients with the same team.
Perfect. Fantastic. And yeah, you mentioned there that you started in 2017. I did do some LinkedIn snooping, and I'm aware that you graduated in 2014. So that's quite a quick turnaround from graduating to starting your own company. Can you talk me through kind of what that journey looked like and what kind of factors were behind your decision to actually get started with founding Cloud Campaign?
I had a bit of an accelerated MBA, I guess you could say, working on the job. After college, I joined this startup in the Bay Area called Mojave Networks. And about 6 months into being there full time, because I'd interned previously during one of my summers when I was still in university. But about 6 months into being there full time, we got acquired by a company called Sophos, which is a much larger startup. I think it was like 2,500 employees at the time, and they're based out of the UK. And essentially got to see the whole process from start to finish of starting initial talks and acquisition to then making sure we have a kind of all our ducks in a row for the acquisition to go through, and then post acquisition integration of getting our product fully built into their ecosystem. And yeah, it was a really just kind of fun and exciting experience for me. And then about 2 years after that, about a year and a half after that, Sophos went public. And so getting to see that process as well, which is, very different and also very exciting of being at this now 2,500 person company going public. It was, I think, what really kickstarted my interest in, hey, like I really want to start a company. I think I can do this. I was fortunate to have that really great experience, which isn't the outcome for every startup. So maybe I was a little bit of a survivor bias of, yes, like this is a good idea. This is going to be great. I should go do this. But yeah, things have been good so far. It's been a fun experience, but that's really kind of what kickstarted the journey for me.
Yeah, perfect. That's almost had a kind of crash course in startups, basically. That's really interesting. And in terms of kind of founding Cloud Campaign, was that with, I know VC backing has been a part of your journey so far. Is that something that was there from sort of day one, or did you have to kind of scrap around before that and then build that into your pathway?
Yeah, there was a lot of scrapping around initially before we raised any sort of funding. So I started the company in 2017, as I mentioned. It was just me for the first year, and I wasn't really sure if what this was going to become, right? I wasn't going to go straight out the gate and raise VC money because I wasn't sure if this was even worthy of VC money, if it could even become a large enough business for the calculus to make sense to raise money. And so initially I was thinking, maybe this will be like just kind of a side business, like a, profitable side business that just generates profit and revenue, and I can go focus my time on other things. And within the first year, I realized, no, like this is going to require a bit more effort. It's going to require a sales process. It's not like a product I can just put out there and people discover how to use it and start to use it and start paying me money. And so it was about that year mark when I brought on a co-founder who had more of a sales, marketing, kind of go-to-market experience. And we then stuck it out for another, I think, year and a half before we raised any money. So we got to a point where the product was in market. We were generating about $10,000 a month in revenue and realized, okay, now there's an opportunity for us to grow a lot quicker if we could just add a few more folks to the team. Let's go and raise some money now that we kind of have the model proven out.
Right. That makes sense. And the co-founder that you brought on, was that someone in your network already, or was that kind of a search to find the right person for that role?
It was someone that I had met through a friend. Yeah, it's kind of a random circumstance where I went on a ski trip. We were skiing, snowboarding for the weekend, staying at this cabin. One of my friends invited me on the trip, and one of his really good buddies that he went to college with was there, Ross, who ends up becoming my co-founder. And Ross and I were talking, and he was mentioning that he was doing this video production business at the time where he was selling commercials to companies like Audi. And my thought was, wow, if you could sell commercials to Audi, you could definitely sell a software platform to Audi. And so we started talking right after that. And then he shortly after joined the company as a co-founder.
Wow, yeah, that's that's a good logic. I think all my my adverts for salespeople now, I'm going to say, must be able to sell commercials to Audi, because it's a good qualifier there. And in terms of, kind of, you talked a bit about why you went to VCs, but what did that process actually look like for you? I mean, how did you kind of find where to go, who to go to, and then make that decision for the right kind of venture capitalists for your business and your mission?
In 2019, we went through an accelerator program here in Boulder, Colorado called Boomtown Accelerators. And through that process, we met a couple of local angel investors. And that was our initial round. We only raised $175,000 in August of 2019. And it was just from a handful of angels that are local here. Those were like the only folks that are really willing to give us money. So it's not like we had a choice initially. Like, who do we want to work with? It's more of like, hey, these angels want to give us money. They seem great. They believe in what we're building. Let's take the money and let's start to build and grow quicker. And then from there, we were really fortunate that the angels that invested in our business were also LPs in local funds. And so they were able to make those intros to all the funds kind of within the Colorado region. Even some funds that were outside of Colorado, because again, they were limited partners, so they were investors in those funds. So their recommendation went a long way and made it really easy for us to get meetings with partners. And then for each subsequent round, so our seed round and our Series A, we were really fortunate to be able to kind of pick and choose which investors we wanted to work with. For our seed round, we had multiple term sheets, which is obviously a great situation to be in, because then you can choose, hey, do I want to work with this investor, that investor? Obviously, there's like different terms that are involved in the actual term sheet. But kind of how we decided who we wanted to work with, I think a lot of it came down to expectations of the fund. If you think about, a more regional fund that's focused on job creation, they're focused on helping their local startups, helping the local community, they would be okay with a still a good exit. Let's say it's like a 4 to 5x exit of what they invested in. Like that's a decent outcome for a local regional firm, and like they would probably take that. If you take investment from a Bay Area firm that's managing $1 billion in assets, they're not going to be okay with a 4 to 5x exit. They need 1 or 2 companies to return the entire fund. And so expectations are just very different, and that really limits your optionality. Where for us right now, in theory, we could sell for $100 million because of the VCs that we've worked with. If we would have taken funding from a Bay Area firm, most likely that would not be a good exit for them.
Right. Yeah, that makes a lot of sense, actually. I haven't heard it explained in that kind of more regional kind of framework before. And in terms of actually making yourselves attractive to those initial investors, is there anything that you did, or kind of is there a way in which you tailored your approach to make yourself seem like a good investment, essentially?
It's all storytelling. I mean, same as sales, right? It's all about the story and getting people really excited about the mission and vision that you have. I think for us, we're fortunate in that there's been this macro trend that's happening. So, Cloud Campaign is built for marketing agencies. And I think what's happened over the past 10 years is more and more brands are starting to work with agencies. And they're not your typical like WPP or Omnicom, like large creative agencies that are doing billions of dollars a year. It's more of your mom and pop, small localized, verticalized agencies that these brands are working with. And so the recent stat that I saw was about 79% of SMBs in the United States are currently working with an agency or a freelancer to help them with marketing. And that's crazy.
Wow.
That was not the case 10 years ago. I think there's been this digital transformation where a lot of brands are realizing, I need to get online and I need to have an online presence, but I don't know how to do it. So let me hire my local agency that my friend recommended, and they'll help me advertise or market on social media, email marketing, website, whatever it might be. And so for us, we're riding this much larger trend. And I think that's really been a tailwind for us when we go to fundraise because, hey, here's the data behind it. This is the trend that's happening. No one else in our market has realized it quite yet, or they're too large, and they have realized it. They're too large to pivot at this point. Their product is already so established. 90% of their revenue is coming from the brands directly. It's really difficult for them to then take their existing product and make it work for marketing agencies just because the needs are so different. There's a lot of nuances in this market. And so that's kind of the story that we've been telling that's worked really well for fundraising.
Yeah, perfect. Yeah, that's really interesting. And I get my kind of follow-up question on that is, I was going to ask you, you obviously kind of was building this thing by yourself, one person in a room for a year, and then noticed that you were making quite a lot in ARR, and then decided to kind of go for funding, and it's all gone well, and you're now hiring loads of people. So you've grown very, very quickly and had a lot of early success. Do you think that story and that adaptability is the key factor behind that, or are there other identifying factors that you've seen to contribute to that really early success?
I mean, I think one thing that we do really well is we track performance and we track progress on a weekly basis, which can be a bit difficult sometimes, right? Like it feels like a roller coaster because you have a high week, then you have a low week, then you have a low week. But the thing that it does do well is it allows you to course correct very quickly. So if we ever notice things are moving in the wrong direction, we start to track it. Hey, this week looked bad. Let's see if this happens for 2 more weeks. Okay, this happened 3 weeks in a row. Let's course correct. Let's figure out why this isn't working. And so I think the focus on numbers, the focus on reporting, those reports I send to all of our investors every Monday. So it's very frequent, but it allows us to kind of keep a pulse on what's happening within the business. And I think that's been one of the reasons why we've been able to be successful and continue to grow revenue. Is just that ability to kind of course correct quickly if need be and make sure that we are continuing to move in the right direction and make progress.
Yeah, that's really interesting you say that, because that's a big philosophy of myself as well, is looking at week by week and even sometimes day by day and how you can course correct. I'm keen to know how you intertwine that with a business culture that comes across as positive and progressive rather than sort of dominating or autocratic, if that makes sense.
Yeah, I mean, I think you need to focus on the positives, right? Like, I think you need to focus on what's going well. Obviously you are going to course correct. So if something negative is happening, you do need to call it out. But I think there's ways to do it where you focus more on, hey, things were going really well the past 3 weeks. It seems like we took a little dip. Why is that? Did anything change? Do we need to readjust our strategy? How do we get back to just doing great, right? Like the focus is we want everyone to be crushing it within the company. We want everyone to be doing great. We want all the metrics moving in the right direction. And so the focus ideally is more on the positives than the negatives. And I think being such a small company, like right now we have 25 employees, so we're still really small. Being this size, I think everyone has a sense of ownership where everyone wants the company to succeed. They want to be successful. We're all kind of driving for the same goal. So we're all on the same team. And so it's not like it's top down of, hey, you made a mistake. Why is this happening? Why do these numbers look like that? It's more of, at this point, everyone feels accountable. And even kind of the lowest level employee feels like ownership for their own number, and they're going to try and make the numbers look good.
Yeah, no, totally. It's clear, Ryan, that you're obviously a very good natural sort of leader, which is important for a CEO, obviously, of a company. I'm aware that you led kind of engineering teams in some of your previous roles, and I was curious to know how you reacted and responded to a massive change where you're now responsible for every single team under the business and every aspect rather than just one particular role or one particular function within a company?
It's a good question. I would almost say in some ways it's easier because we've hired great people. Like we have great mid-level management that I trust that has way more experience than I do, right? Like our head of customer success, Ken, he's been doing this for 25 years. He's been in a VP role, I think like 3 previous times. So he's way more qualified and better suited to run that department than I am. And for me, it's just kind of checking in with him saying, hey, is there anything you need? Like, what can I do to make your job easier? Any other resources you need? Do we need to hire any more folks? So it's more of like me trying to support him, and he's making the more strategic decisions for his department. And yeah, and I think just if you can hire the right people, if you can have the right mid-level management in place, it makes your job a lot easier as a leader because they're making all the tough decisions and you're just there to support them to make sure they have all the resources they need to do their best job.
Yeah, totally. That's a great answer. And similarly, in the vein of that, kind of stepping from the full engineering focus straight into a kind of all-seeing, all-knowing CEO focus. Do you think that the kind of mentality or the approach that you need to have as an engineer and that kind of mindset is a benefit to the role that you're in now in terms of what you need to do to approach a task and the way that you've learned to do that?
I think it's helpful. I think you do need to view it through the lens that a lot of things might not map over in terms of your skill set. And so approach every new problem with a learner's mindset of, I have this one data point, right? Like I'm an engineer, so I have my own viewpoint, my data point. It could be wrong. Like maybe it's right, maybe that's the best way to do it, but it could be wrong. And so I think if you enter all situations with that viewpoint, it's really helpful because you can say, hey, here's how I do it. Here's how I would do it as an engineer. But I understand like being a CEO is very different than being an engineer. So maybe it's not the right solution. So like, let's get feedback from others on the team. Let's consult our advisors. Let's talk to our board and say, is this really the right way? Is this the most efficient way? Or should we be doing it differently? And so I think it's helpful because I can bring new viewpoints that maybe others aren't thinking about. Because I do have the engineering mindset and I try to problem solve a different way than most folks. But again, like I think if you have an open mindset, it works. I think if you're focused on, hey, this is the best solution, and this is the only way to do it, and you don't consider what others are suggesting, I think it's a huge pitfall, just because not all problems can be solved the same way you'd solve an engineering problem.
Yeah, no, that makes a lot of sense. So kind of divide and conquer and kind of collaborate to move forwards in the same direction, essentially.
Yeah, exactly.
And in terms of that direction, then obviously you're growing very quickly at the moment, and looking to kind of just keep doing that. What's sort of next for Cloud Campaign? Where do you guys plan to be in the next few years, and what do you think are the key milestones to sort of getting there?
Yeah, I mean, of course, we have sales milestones, revenue milestones that we're aiming to hit. But I think beyond that, we're really focused on what do our customers need, right? Like what are the biggest pain points that they're trying to solve today, and what are the gaps in the market? We've solved one of them with our current product, the social media management dashboard. And we think we're in a really good spot because if you look at our win rate compared to some of the competitors that are in the space that are public companies, we're winning head to head over 80% of the time. So that gives us a lot of confidence that this one product that we have in the market today is doing great and it's in a really good spot. And so the focus for us over the next 18 months is actually rolling out 2 new products to become more of an ecosystem for marketing agencies. Ultimately, we want to build the operating system that allows marketing agencies to run their business. And we kind of liken it to Shopify, right? If you want to start an e-commerce store, you go to Shopify, you put in your credit card, in 20 minutes, you can start selling online. They have partners that help you with fulfillment. They'll help you with marketing through their marketplace. And so we want to do the same thing for marketing agencies, where if you have that marketing background, if you have that skill set already, it shouldn't be so difficult to start monetizing that and starting an agency. And so we want to make Cloud Campaign a place where, marketers can go, they can invoice all their clients through us, they can send proposals through us, and then they'll have access to all the marketing automation tools that they need to then actually run the campaigns for their clients.
Wow, yeah, that's a really cool mission, and I think that's going to be an exciting journey in terms of kind of what you're creating and developing. And something that we've spoken about here a few times now is kind of the VC funding and those kind of steps. Having actually seen that yourself in your previous experience, kind of almost from start through to finish post IPO. Do you have a clear picture in where you're going in that sense, or is it one step to the next in terms of funding? And how do you think your messaging might change as you go through that?
It's a good question. I mean, and we see kind of a 4-year path to potentially becoming a public company here. I mean, the kind of current milestone is at least 100 million in ARR, and our goal. So right now we're at 2 million. We should cross 2 million ARR this month. We should end this year at 3 million. The goal from there is to triple, double. So essentially 3 to 10 to 30 to 60 to 120. It's obviously a lot more difficult than just saying triple. It's going to go into that. But that's kind of the goal, right? Like those are the revenue benchmarks that we're tracking towards. And that's what we're hoping to accomplish over the next 4 years. And so there's kind of additional funding steps along the way that are going to help us unlock those additional levers of growth. And, tripling from 1 million to 3 million is a very different story than tripling from 10 million to 30 million. And so that's kind of how we were thinking about our VC journey, is what are kind of those different milestones that we need to hit? How much capital do we need to get there? And then who are the partners that are going to help us get there? And I think that's when we started to think about, does it make sense to shift from working with more regional VCs to more, larger, more national, kind of tier 1 VCs. So General Catalyst is a great example, and someone that we've been talking to. They work with a lot of platform companies. We want to go for a platform play. They kind of have the playbook of how do you take a company that's doing 10 million a year in revenue and get them to become a public company as fast as possible. And so as we get a little bit closer to that, and we realize like that is our number one goal is becoming a public company, then I think we start to shift our focus in terms of what type of VCs we're looking to work with and have the right partners in place to help us get there.
Yeah, perfect. Well, it's you've obviously got a very clear vision, both on the practical stuff like the funding and the roadmap, but also on what you're trying to create and what you're trying to kind of get to, which is amazing to hear. I'm conscious we're getting to the end of time here, but I had one more question that I was keen to ask you. I wanted to imagine that there's an engineer out there who's listening, who's been working on a side project that's near completion, and they're at the point where they're deciding to quit their job and turn it into a business. What advice would you give them in the first 30 or 60 days to kind of improve the chances of success in that venture?
Definitely talk to customers. I think that's a huge mistake that I made during the first 6 to 7 months of building Cloud Campaign. I didn't talk to customers enough. I just kind of put the product out there in market and said, yeah, folks will sign up for it. They'll understand how to use it. It'll make sense. It'll be a great value add for them. The initial product that I built was the wrong product. No one wanted to pay for it. And it took me about 7 months to figure that out. And the only way I figured it out is I offered the product for free initially, got a lot of folks onto the platform, and then flipped the switch to say, okay, now you have to pay for it. It wasn't a lot of money at the time. It was a pretty cheap product. And I think one person converted. And then I finally started the process of reaching out to everyone saying, hey, like, why aren't you paying for this product? Like, you've been for 6 months, isn't it great? And they're like, no, it's not. Like, it doesn't solve the problem for me. It's not actually what I needed. is a supplemental product. And like, yeah, it's really not critical for me. And so my advice is, if you have, the engineering background, it's really easy to build. That's your skill set, and that's what comes easy to you. I would say push yourself to talk to customers and get feedback early on to make sure you actually are solving a problem that's real, and it's a painful enough problem that people are willing to pay money for it, and hopefully a considerable amount of money. Like, I think a number one mistake that engineers make is not charging enough. I think they undervalue their time and don't realize how great a potential solution could be and how painful a potential problem could be. So, if you're solving a real problem, if it's something that people really care about, they're going to be willing to pay a decent amount of money for it. So try to charge more if you can off the bat. And again, work with those early customers and prospective customers to get feedback.
Fantastic. And another great answer, Ryan. It's been such a pleasure speaking with you, getting your story, but more importantly, your kind of wisdom and your perspective there. So that's all we got time for this week. Thank you so much for coming on the pod.
Of course. Thanks so much for having me. This has been super fun.
Cheers. Well, for all those out there listening, engineers through to CEOs, thanks so much for listening, and tune in next time for Growing Tech Fast.